And let's continue with the next outlook for the previous week. And I had pretty crazy trade on US 30. So what we had here is this weekly zone. How did this weekly zone create itself? So if we look pretty carefully, we will see that we had this previous unmitigated zone here. And imbalance above it, a bit of imbalance above it. So we can say that there was some kind of a chain. And as you can see, the price created this big impulse to the upside, then created this huge correction with this short-term absorption and creation of what? Of impulse correction into where? Into the zone, into this hidden zone, and then impulse to the upside. And now price came back to this zone, which is a part of the chain, of the bullish chain, of this local bullish chain in an overall historically very bullish market, and these reaccumulations that are playing themselves out. So some bullishness was definitely there on weekly. On daily, the only thing that is telling the bullishness here is that we already broke the high, and so we can expect some kind of tightening for continuation, or this tightening can switch to the bullish side later. So but if we take the latest leg, then of course it's bullish. So daily is not perfect, but the situation is like this. And 4 hours pretty overextended to the downside. Also, what I had in my mind is that we have the end of the month, the end of the week, NFP coming, and interest rates coming, so a lot of volatility. And 4 hours, I can say that they are really overextended structurally, but if we look, we had distribution, one cycle of redistribution, second cycle, maybe third cycle, fourth cycle of redistribution, and then 1, 2, 3, 4 shifts to the downside. And these shifts to the downside were accompanied with a relatively overextended move. So some bullishness was possible there, at least short term, you know, at least to take some of the highs for one more cycle of redistribution. And when I saw this kind of price action, so slowly crawling to the upside, so not showing any clearness to the bullish side or to the bearish side, but overall, if we see like this tap into the zone, and then the price just starts to move up, and sometimes it shows some clarity, then unclarity, and continues to the upside. So in the moment, in this bullish leg, for me it's okay to follow some bullishness, because as you know, I'm entering 1 minute and my take profit is only 2R. So it's really important for me to follow the immediate price action. So I try to predict as little as possible and to follow the price action at the hand as good as possible. And lately here we had 5 minutes that are showing clear impulses, corrections into the zone, then zones 2.0, and then impulse, correction, impulse into the zone, and the same thing with reaccumulation. On 1 minute, the price overall moving up, also creating and holding structure zone confirmation with impulse, correction, impulse, and then continuation. And so here I decided to enter like this. Unfortunately, I was looking at price at blackbull.com, and they made some crazy things into their charts, so their chart became like really wiki mess. So I just okay, let me check, because this probably should be a loser here. Let me quickly check. So my history is showing that this was a break-even trade, like mostly a break-even. So I don't know, but what we had here is this 1 hour 1 minute shifts, and then impulse correction, and somewhere here entry point. I don't know. I mean, it's not like full break-even, but maybe plus 1 hour or something like that. So maybe I just decided to close here. I don't remember, but the thing is, this was the trade here, and then the price continued to move to the upside. How it continued to do it? It continued to do it with this big move here, and what I thought is, if we are not rejecting this zone, then we should definitely be able to move a bit higher, maybe to take these highs, you know, or even somewhere here, you know, above these highs. And I entered a trade here, and my initial target was this one, and I entered a trade somewhere here. Again, because of the charts changing, I don't remember the exact point, but the thing is, we had this impulse correction into the zone here, and so while the price created new impulses to the upside, maybe here impulse correction, impulse, the entry was here, and when the price reached 2R, I decided not to close it and just to wait. So how, I mean, if the price is holding and we have so much volatility, and because of the instrument, so US30 is real impulsive, can be real impulsive, I decided just to hold, and I actually was able to hold it all the way to 8R, but in my journal I just record 2R. And it went then eventually maybe to 20R, something like that. So this was the development of this price action. So as you can see, it created just a series of impulse correction impulses, then almost a perfect, you know, perfect scenario here. So what we have is an impulse, big correction, not reaching the zone, you know, so liquidity here is selling, weak side, selling from where? From here. And then it creates impulse correction, and just breaks it to the downside, breaks it to the upside. Yeah, and I even, so I actually hold this, it didn't went here, and then on the next day when it went like here and then pulled back, maybe somewhere here I closed it, maybe even more than 8R, but it was a huge trade. And after this, and my initial target, I mean my first target was here, like at 8R, but then when price just started to hold, I decided to move my target here, but then I closed here. I was not able to hold it, but it did hold and went yeah, basically to 20R and above. So let me check it on my journal. Yeah, so 20R, and I had 180 trades. This is the statistics. So overall, like for 2R, it's 35% win rate, 30R profit, 3R 20, so not reaching 2R. So statistically 2R is still the best management for me. 5R is almost there, you know, so if I will have 5-7R more, I will be able to have the same kind of results. However, we need to understand that 5R for me win rate is like 13%. It's a really small number. It's really hard emotionally. Yeah, so 2R is really nice. And then I also had some gold trades during this week, some really nice ones. So again, for the bullish bias, please check 2 previous outlooks. And what we had here is this 15-minute bullish push, and then I had some break-evens and losers here. As you can see, we had this bullish impulse and then creation of new impulse, correction, possible impulse. Price went to 1 hour, 1 hour, and then went to the losing side. And then during London next day, so let me show you this because this is more interesting. Again, you see, this is not this is why it's hard to trade price action with this, because it can just be like this big worm for some time. And I definitely knew and understood that we have a more clear zone here, but I also understood that the gold is really bullish at the moment and I didn't want to miss it, so I was trying to catch it. And again, same 15 minutes 15 minutes impulse, 5 minutes becomes more bullish. Again, not perfectly clear here, but some bullishness is there. And on 1 minute it's pretty clear, so structure is holding, moving to the upside, impulse into the zone with new impulses and corrections. Actually, this was the entry point, you see this one. So big impulse into the zone, and instead of entering like I did before with the candle break, I'm waiting for impulse, correction, and on the break I'm entering. And by the way, this is the difference between live, one more difference between live and backtesting, because on backtest I would probably like put my entry here, on the break. But on the live, so this is 1 minute candle, while it gets created, you like thinking, so am I entering here? Then you place in a trade and you have entry point much above the like the possible entry, so to say. And sometimes I enter from this impulse correction impulse, I can enter here. So you need to understand that like your results on backtesting and entry points on backtesting, sometimes they are like too perfect. This trade went almost to my take profit. Actually, it went like, yeah, like this to take profit, but because of the spread, I was not filled here, and it reversed all the way back. And here I was at break even already, but I just decided, well, I mean, it should go now. Maybe this is a reaccumulation, and I moved my stop loss to my initial position. So what it did later, it went, stopped me out by this little motherfucker, and started to move up impulsively again. So it created like this small impulse correction, and I decided, okay, like this is my last trade, as I always do, and enter here. And it almost stopped me out now. So I was unlucky here, I was lucky here. These things are happening all the time. It went to 2R almost immediately, and then went to 5R eventually. So my full result is 2R. My my maximum favorable excursion is 5R, which I record in the journal to use in the future. So this were my trades for the day. Then the price continued to mitigate deeper and then created this bullish structure again. So what I mean by bullish structure, again, for hours, is holding its impulse tap into the zone and then creation of impulse, correction, impulse on fractal basis here. And when the price is moving higher from here, our targets is this, and this. So looking to follow the price, 15 minutes creating this absorption, impulse, correction, impulse, correction, impulse into the zone. And now with not the clearest moves on 5 minutes, but pretty clear on 1 minute, so let me clean the chart a bit. So we had this big structural move into the zone itself, and then again, maybe later I would enter here, maybe here, but now I want ideally to have some kind of impulse, correction, impulse. And so I waited for I waited for this. So we had impulse. So first of all, we had impulse, correction, impulse, or with bigger picture, impulse, correction, and this was the start of the impulse. I was entering here, but it started to move against me, so I was just holding, and then it reversed, and as you can see, created impulse correction below the high. So this is a real good sign, because you have impulse, and instead of like flying all the way here, you are building additional liquidity, and then you are breaking it. And not only that, you are creating this chain of demand. So first chain, second chain, third chain here, fourth chain. And in my latest trades, I always see that until we are holding this, we are fine. But usually when we break, so first with the first break, it can go much lower. And yeah, so we are holding. I mean, this was already a take profit here at 2R. 2R made me pretty nervous. Went to 5R then, I believe, if I'm not mistaken. Yeah, this trade also went to 5R. Oh no, it didn't. It just went to 3R. Yeah, 3R. Like this. And did I have something else? No, I guess that's all. And then it just fell. Oh no, actually it's holding, so looking for some bullishness probably next week. Okay, and also I wanted to show my current collection of the latest impulses, corrections, and impulses. So when you have bullish bias for the market overall, you know, so maybe you are somewhere in this place, and you are somewhere in like this place on middle time frames. So bullish, bullish, bullish. What kind of confirmations I'm looking for right now? Let's just together look through it. So impulse, correction, impulse, impulse, correction, impulse, impulse, correction, impulse, impulse, correction, impulse. Yeah. In push, correction, push. So this is probably the most perfect, one of the most perfect examples which you can get. Like you have an underlying bullish move, you have a recent break of the structure but not too deep, and then you have this consolidation after the break, and then on the new break you are entering. So this is what I'm calling not predicting, because if you have, so let's assume that you have a zone somewhere here, you have a zone to the bearish side, and you say, okay, I want to fade this impulse, and I'm selling here against this impulse, and I'm seeing it on TradingView a lot, you know, when people just try to predict the price too much. Of course, we are also predicting that the price will continue the move, but not only that, we are actually entering with the moving price. Of course, you need to have more bullish confluences throughout your context. So for instance, this impulse correction impulse, though it worked, it is not situated in this kind of underlying structure. Yeah, same thing here. This is impulse correction impulse, but more in isolation, no? And this one is more clear now, because you have a chain of demand here with this zone, this zone, this zone, everything is holding, and you have impulse correction, and more impulses to the upside. Again, you have underlying bullish move, you have impulse correction impulse. You have impulse correction impulse from the bottom, as you can see. So this is not a good entry in itself, but I'm just collecting impulse correction impulse patterns. So this is impulse correction impulse. If anything, this impulse correction and impulse is much better, because you have underlying bearishness here. This is pretty clear. So you have bullish market, reaccumulation, impulse, correction, impulse, deeper correction into the zone, just one more impulse, correction into the zone, impulse, correction, impulse. ICI. So liquidity is created and we are breaking to the upside. Not the clearest one. Let me delete it.